Are you thinking of investing in Dubai's real estate market and wondering what your returns may look like? In this video, we'll touch on both ready and off-plan properties to understand what the benefits are. Firstly, let's look at what we're seeing currently in the market in June 2025. So as we can see, the gross rental yields currently are at 6.83%. This is split into the apartments achieving 7.21% and the villas and townhouses at 4.95%. This is to be expected with townhouse and villa properties. The purchase price on these is significantly higher, however the rent that you can charge does not fall in line at the same rate. So it's important to note that your property may be vacant for a little bit time prior to renting it out. This does reduce your rental yield also. Due to the affordability, apartments have a much higher demand, meaning that they tend to be rented out a lot quicker. So we mentioned what the current rental yields look like. So what is the price per square foot and how is this appreciated over the last few years? Let's have a look. As you can see the graph here, in general over the last 5 years we have had a steady but vast increase in terms of price per square foot in Dubai. Now we are currently sat at a price per square foot of 1800 dirhams. Here we can see an approximate increase on price per square foot over the last 5 years. This of course highlights some great appreciation that we are still seeing happen today. However, as Dubai grows, the market gets more mature, so we wouldn't expect to see increases as crazy as this. However, with the population still growing, we are confident the market would still increase. Now looking at ready and off-plan investments. With ready properties, not only do you have the capital appreciation, but you also have the rental yields. We'll dive into the rental yields here and what you would expect across the market in current date. One point to note here is that the areas with the highest capital appreciation don't always correlate for the highest rental yield and vice versa. So here we have the highest rental yield areas in June 2025. This data is from the DLD, and as you can see, Dubai Investment Park tops the chart at 9.03%. This is gross yield, not net yield. So please take into account you will have your service charges and of course any maintenance that the landlord may need to do on the apartment. Off plan. Of course, you don't have a rental yield throughout this process. You'll have an initial down payment that you make and then you'll be on a further payment plan up until handover, which you'll have then a larger payment to make on handover. Once the property hands over, of course, then you can rent it out and achieve your rental yields then. However, for now, the focus with an off-plan property will be capital appreciation. With off-plan, you're expected to be investing in an area that will develop for the future. So the main goal here for your off-plan purchase is capital appreciation. This can often outweigh ready properties. This is due to the investment that you make. You will likely be putting your money into an area that is undeveloped, however, it has great plans for the future. Because you only have a certain percentage of your capital in the off-plan property, when this is appreciating, you're actually seeing a great return on your equity. So the conclusion of this video, looking at ready properties, we've seen that the market increased by 9% across the board, and we've seen an average rental yield of 7%. So this totals 16% here. This is what you can expect if it is to follow on from the previous year. Off-plan can of course be a little bit trickier to predict as we are relying on the project specifically. However, as mentioned, they do tend to appreciate much more than ready properties. So estimated around another 10% in appreciation. If you're looking to invest in either ready or off-plan property, get in contact with us on the details provided below. Or if you're looking for more information, click the video up here.